Power Breakfast in the Mumbai News Centre. I'm Anisha Jain and with me is Manglam Malu. Well, Manglam, yesterday we were fairly excited that there is a partial trade agreement between US and China and the market started off on a positive note. But by the end of the day, that optimism faded and then we saw a sharp sell-off in the last half an hour or so in the trade yesterday.
That's why they call it trade uncertainty, perhaps.
Absolutely.
You know, wouldn't put it past Donald Trump to come out with some random tweet right now saying that, you know, they reimpose tariffs or not. But then things look good for our markets. FIIs are buying for 2 days in a row after selling for a very long time. HUL results weren't that bad. And at the same time, there is some optimism coming in on the index futures and options space as well. So let's see how that pans out. First up, all the top stories that we're tracking this morning. Wall Street slips while Asian markets are cautious after US-China partial deal optimism fades. SGX Nifty indicates a flat start to trade.
10,900 crore rupees worth loans disbursed by public sector banks through the credit outreach program across 200 districts, says the government. In the first 9 days of October, 81,700 crore loans were disbursed, and out of this, more than 34,000 crore rupees was disbursed to new entrepreneurs.
Retail inflation for the month of September rises to near the highest that we've seen in the last 14 months, led by an increase in vegetable prices. The headline inflation is now just near RBI's inflation target of 4%.
FMCG major Hindustan Unilever reports better than expected numbers for the second quarter, but the management remains cautious, says the demand outlook continues to be challenging.
In earnings to watch out for today, we'll have numbers from Wipro. A CNBC-TV18 poll sees dollar revenue growth of 0.9%. Guidance and outlook on BFSI will be key to watch. Well, let's take a look at the Asian markets. The only one which is rising in today's trading session is Nikkei, which was shut yesterday, so some catch-up taking place out there. But by and large, the markets are mixed, and that's following the previous day's rally as new doubts emerged overnight about the partial US-China trade deal. Reports suggest that China now wants another round of talks before signing what US President Donald Trump last week called a very substantial Phase 1 deal. That's not all. In fact, if trade talks do not go through and there is no negotiation which has reached on the negotiating table, Stephen Mnuchin also said that the tariffs that they've imposed, which start from December, will continue to be around. As a result of which, we're seeing the Korean markets not as optimistic as the Japanese indices or Japanese index. We have the Straits and the Taiwanese indices should come up for you on the screen as well. The SGX Nifty indicates a mild positive start, but it will be very interesting to see whether we cross the hump of the 100-day moving average or not on the upside today.
And all these comments regarding the trade developments also had an impact on Wall Street because the US stocks closed slightly lower amid trade deal skepticism, economic growth concerns. The Dow Jones was down 29 points at close, while the S&P 500 and Nasdaq slipped 0.1%. Investors also braced for the start of earnings season with a slew of major banks set to report later tonight. CNBC's Kate Rogers gets us a wrap of all the action that transpired on Wall Street yesterday.
U.S. stocks are little changed as last week's trade optimism fades. The Dow off by 29, the S&P flat, and the Nasdaq losing 8 points. Sources telling CNBC that China wants an additional round of trade talks before inking what President Donald Trump has referred to as the first phase of a trade deal. That was enough to take the steam out of the markets today following a big rally on Friday. The latest round of negotiations ended Friday with the president saying that China had agreed to purchase agricultural products, and in return, the U.S. will hold off on a tariff hike that was due to take effect. The Libra Association exodus continues. Facebook's cryptocurrency project was originally compiled of 28 founding members, but that number has dwindled after facing widespread scrutiny from international regulators and lawmakers. Today, Booking Holdings, which owns travel sites Booking.com and Priceline.com, joined a list of 6 other companies who are cutting ties with the project. And Uber laying off 350 employees across 4 divisions, including its self-driving unit and Uber Eats. This is on top of the more than 800 other job cuts that have taken place over the past 3 months as the ride-hailing company looks to slash its costs. That's the action from the U.S. market. Back to you in Mumbai.
All right, and former Treasury Secretary Larry Summers says Phase 1 trade agreement isn't a big deal. In an interview with CNBC, he talks about US-China trade relations and the impact on the global economy. Listen in.
I don't think this is a big deal. The agreement may well close, but I don't think it will address the fundamental overhang of tension and uncertainty that's been created in the U.S.-China relationship and that will inhibit spending plans and business investment on both sides of the Pacific. This is not an event that anybody will remember for a long time, one way or the other.
Does this lead us then into a multi-year pattern of tariff risk, tariff threats, talk of escalation, and muted capex and hiring? What happens now?
I think without some creative diplomacy, without the U.S. administration establishing some consistency and credibility in the pattern of its responses, without some effort to make this a more global approach to China, I suspect we're going to be mired in the current kind of difficulties for quite some time, and I think it will be one of the adverse factors affecting the economy.
So it's hard to imagine any kind of multilateral relationship beginning here ahead of the election, unless you think I'm mistaken on that one.
No, I think you're right. I think that we're in a difficult place given the political strains on both sides, given the concerns about the economies on both sides. I think this is going to be a problem that didn't get made in a month or a year, and I don't think it's going to get resolved overnight.
The business cycle, what this prolonged uncertainty would do to the cycle, whether tariffs are inflationary or disinflationary, I'm going to guess you think it's the latter.
I think the deflationary and disinflationary risks right now are much greater than the inflationary risk. I certainly think we're very late in this cycle. I think the odds of a recession starting by the end of 2020 are probably below 50%, but I don't think they're a lot below 50%. And I think the risk that recession will start in the next several years have to be better than even. And I think the great concern is with what I've called the monetary black hole, that zero rates appear to be where we're stuck in Europe and Japan, and we're one recession away from a situation of that kind. And it's a very different world when everyone's stuck at zero interest rates. We're going to have to think about stabilization policy. Institutions are going to have to think about their investment policy in a very different world, in a very different way when we have black hole, zero interest rate world, and that's what I fear we're headed into.
Well, on that note, let's also listen into some opinion from Stephen Roach on the perpetrated trade agreement reached between U.S. and China.
China's got a lot of problems on its plate that it's addressing, and the trade relationship with the United States is certainly a problem, but all sorts of issues from excess debt to reforming state-owned enterprises to environmental degradation to income inequality to shifting the structure of the model to consumption. This is a huge agenda for any country. We have our agenda, and my sense is that we both need to pay attention to what we need to do to strengthen ourselves, and so when we engage the other, we engage from a position of strength, not from a position of weakness, which is unfortunately what we're doing right now in the United States. I'm an anti-tariff person. I would prefer to see them all removed and we get back to a more constructive framework of engagement and negotiation, but that's obviously not what's going to happen. The strategy that we've had is to try to solve our macroeconomic imbalances, which has given rise to trade deficits with over 100 countries, by fixating on one, China. And in the meantime, we're not addressing the macro problems we have in the United States that have given rise to this multi-country, multilateral trade deficit.
All right, and across the Atlantic, European markets too ended lower as traders tracked the latest developments on the Brexit front as well as partial trade accord between the US and China, which showed signs of uncertainty. So nearly 0.5% shaved off the major European indices yesterday.
Okay, let's shift focus to the currency space now. The dollar index trades soft as optimism waned about a trade deal between US and China. The safe haven Japanese yen also firmed slightly against the US dollar.
Let's talk about the world of commodities then. Crude oil prices, they slip on lack of details about the first phase of a trade deal between the United States and China. Also, there were worries that further escalation along the Syrian and Turkish border could affect output for exports from Iraq. Brent just around $59 per barrel.
Okay, it's time now for a quick break on the show. Up next, we'll get you all the cues and news you need to know for trade this morning.
आपकी गाड़ी से लेकर होम अप्लायंसेस की चमक सालों साल बरकरार रहती है नेरोलैक पेंट से। चमका